Welcome to Moneyman Investments. I want to take a few minutes and talk about the rationale that is behind our three curated strategies. Now, this is a solid rationale that has been formulated using actual market data of the last about 25 odd years. And this will give you an idea on why we have actually come up with these strategies. Before that, our statutory disclaimers. Moneyman Investments is a SEBI registered corporate research analyst with registration number INH 00002538 and BSc enlistment number 7017. Investment in securities market is subject to market risks. Read all the related documents carefully before investing. Registration granted by SEBI, membership of BSc, and certification from NISM in no way guarantee performance of the research analyst or provide any assurance of returns to investors. Please do visit our website www.moneymaninvestments.com to go through our detailed disclaimer. Let's jump in. Now, basically, there are multiple kinds of investing styles in the market that are there. Some of them, now, of course, not all of them work together at the same time ever. The market always rewards one particular investing style in the same way that only certain things go up in the market, not everything goes up together. So, different investing styles fire at different points of time. But what we are trying to do is trying to see which of these styles have sustained over a long time. And I believe 25 years is a long enough time to understand what has really happened in the markets. So I'm going to show you some data that is bound to blow your socks off. So this is a strategy comparison from the year 2005. So 20 years. Now the thing is that some of these indices or strategies were formulated only in 2005. So we've rebased everything to the year 2005. We've assumed that if 1000 rupees were invested in the year 2005, what would they be today had we followed different investing styles? And needless to say, you can clearly see which is the winner, and by a long distance. That is momentum strategies. There is quality strategy also, there is value also, there is market. There are multiple strategies in the market, but essentially the one that has overtaken even over a long time on a sustained basis is the momentum strategy. So 1000 rupees invested in the year 2005 in momentum strategies would have given you somewhere like 52,588 rupees. Look at the difference. This is almost three times of its competitor. That is the next one, 2.5 to 3 times. That is a kind of wealth creation that we are talking about. And true wealth creation happens when we follow the right style. So one of the absolute founding rationales for our all our three strategies is the basis of momentum. We want to see strength. I want to see stocks or sectors starting to fire up, move up. I don't want my money to just lie idle. I don't want it. I don't want your money to lie idle. I want money to be rotated continuously as efficiently as possible and not lie dead in the water. And those are the kind of strategies that we've outlined. So, first and foremost, it is momentum that forms the bedrock for all our three strategies. And I believe that India's time in terms of momentum has really come. And this is what will take off in the coming months and years also. Of course, no strategy is absolutely risk free. There are different risks associated with all these different strategies, and I will explain that also uh, as in due course of time in the coming few slides. I'm so sorry for that. Look at some more supporting aspects. That was for India, what you saw just now. This is data that has been given by MSCI for across the world. So they call it MSCI World Factor Indexes, same thing. And this compares the risk versus the return over a long period of time. They've compared this from 1975 till mid of 2025. That's when the paper was published. So that's when the data has been made available. Clearly, again, momentum is a clear winner, but so is risk. It gives the highest annualized return over a period of time in a sustained basis, but the risk is also high. But having said that, look at the other factors that are at play here. Growth is also not low risk, it's also high risk, but the returns are also low. Value is also high risk, the returns are also good. Now, the point is, how do we find a sweet spot and try and identify, uh, which strategy will give us great returns and how to manage the risks that are inherent with that particular strategy? That is the basic idea. Look at the correlation between different factors. Now, while talking about momentum, I want to tell you that one of our funds, the Moneyman Absolute Momentum Multiplier, MAMM, is purely based on momentum strategies, pure momentum strategies. Next, we come to the correlation between different factors, again published by MSCI over a period of time. This compares different factors, that is, investing styles, and what is their correlation. There's not much correlation, let's say, between a momentum and quality or a momentum and growth. However, there is still enough. And one of our strategies, one of our funds, which is called the MFCC, Moneyman Factor Champions Compounder, that aims to take advantage of these correlations and come up with a portfolio of stocks which combine these different strategies. That's another fund altogether. So, again, a rationale of taking correlation into account and trying to identify what all comes in the commonalities. Look at how these broad investment styles are performed over a period of time. And needless to say, again, data only points that momentum has been the winner by a mile. And look at the probability of outperforming the benchmark. Again, over 1 year, 3 years, and 5 years, uh, momentum, which is in dark green, stands the highest chance, the highest probability. That's what we are trying to do. We are trying to align with the probabilities that are there in the market. And right now, momentum strategies allow us to do that in a beautiful manner. This is the rationale for our third fund, which is called the MSRO, Moneyman Sector Rotation Optimizer. As the name itself is suggesting to you, no single sector performs consistently. This uh, charts out the top five sectors, the bottom two sectors, and the overall markets, which I always consider as Nifty 500. That is the top 500 stocks in the Indian markets over different years, calendar years here. What do you notice? The one thing that leaps out is that there have been hardly any sectors which have continuously outperformed year after year, year after year. Very, 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 very few exceptions here, like here. But otherwise, the sectors keep changing. Money keeps rotating between sectors, between stocks. And our third strategy, which is the MSRO, the Moneyman Sector Rotation Optimizer, aims to capture these sector rotation strategies by trying to stay in the hottest sectors of that time. So, at any given point of time, when the markets are moving well, we aim to remain in the best sectors in the market and take advantage of their moves. Now, these are the three, these are this is the entire rationale that we are talking about. And this would give you an idea of how our funds are, how our strategies are. There is a separate video that explains all these strategies. And of course, please do visit my website, www.moneymaninvestments.com. Everything has been explained in detail over there. This particular presentation, you can lay your hands on it on my website also. So thank you for your time. I hope that this gives you an idea of what is the genesis of our three strategies, what data is supporting them, real live actual market data, and how we are doing this. Coming to the most important point. When we are talking about basing our strategies on essentially momentum, one of the main things is that momentum is also something that I showed you has highest risk. So we try and operate with solid, tight risk management criteria so that we don't give back money to the market. We may make money from the market. Most investors give them back. We have no such intention of giving back money to the market. Once we make it, we want to retain it. So we keep booking profits and we try and maintain our risk management very tightly. More about this in our on our website. Uh, in case you feel the need to meet up as an on an online basis and take any clarification, or just maybe even talk about markets or our different funds or the rationale behind these funds, I'm very happy to do that. On my website, there is a separate link where you can schedule a meeting at your own convenience. So please do head over there and do that, and I'll be very happy to meet up with you online. Thank you very much once again for your time. I hope this was of help to you. Do watch our video on different strategies. And when you watch these two together, you will understand how they all fit in beautifully. Thank you so much.